What's up everyone on YouTube? This is Chris. Welcome back to my channel. In today's video, we're talking all about some big moves that I've been making in the stock market, and specifically the stock that I've gone all in on, meaning I've put in my full position, all that I'm willing to hold, 1,000 shares of this company, and it's gonna be SoFi, okay? Otherwise known as IPOE right now. That's the SPAC by Chamath Palihapitiya, and this is going to bring SoFi, otherwise known as social finance, to the market. Social finance is a company that does a lot of different financial services upon one platform, and that's the beautiful thing about this company. So the first business that they have is the lending business. That is the most profitable right now and the largest by category, and this is including student loans, home loans, personal loans, business loans, things like that. The second part of their business is going to be the tech network, otherwise known as Galileo. And this is kind of like the AWS platform for financial applications, okay? So think about things like Robinhood. So Galileo is like an interface that allows software to talk to each other. Essentially, when you are using a financial application, you're gonna have banks talking to the app, you're gonna have buying and selling, you're gonna have deposits and withdrawals, and those all need to talk to each other and verify, with various institutions. So what Galileo does, it provides all of that to different platforms like Robinhood, for example. So when Robinhood grows, SoFi as a company is going to collect more revenue and grow as well. And with the rise of fintech taking over a lot of traditional financial services, mortgages, for example, and loans, that's all going to be accretive, beneficial to SoFi. And the third main part of their business is going to be the financial services type of business, where you have wealth management, credit cards, debit cards, checking accounts, investment, crypto even. They have all of these services under one umbrella. So it's a one-stop shop. It's very convenient for the consumer. We'll talk about specific numbers with their user base and the revenue breakdown for each of those three categories of their business. And it is insane levels of growth. And that's why I'm investing into this company, because they have a really, really powerful long-term trajectory. By the way, guys, quick note on the CEO. After all, it is pretty interesting and important to know that you are under good management when you're investing in a company. And through Anthony Noto, you can see that he is indeed very, very qualified, I must say. American businessman, CEO of SoFi. He was the former COO of Twitter. He has a lot of experience with Goldman Sachs as well, getting that great finance-based experience and being able to make good investments and judgments in the financial world as far as running companies as well. So he is someone who has been in the position for the past 2 or 3 years. And since that time, as we look at these numbers, you're going to see he's done a hell of a job. The rest of this management team, it is very impressive. Again, you have people from Amazon, from Uber, Zynga, Citi, Striker. So you have a lot of software experience. You have cloud experience there. You have experience simply building a network, which the CEO has talked about in interviews.
Their money right. We can't just do borrowing, and we can't just do investing. And so our goal is to have a comprehensive one-stop shop. So we're there for all the major decisions you'll make in your financial life and all the day-to-day decisions as well.
And so looking at the numbers here to see just what Noto has done as CEO, it is very impressive. So he came on right in early 2018. And at that time, SoFi, their user growth was very flat, you got to say. They went through a period of time where they went from 629,000 members to 653,000 to 704,000. Not a whole lot of growth going on there. But as you can see throughout time, that trend grew stronger and stronger. And he's the one that introduced a lot of new services to the platform. And that is very, very key for the attractiveness of your platform. And then the ability to cross-sell. Okay, cross-selling different services that you have, because at the end of the day, people, they don't want 10 different apps. So if you have one app that you can do to manage your student loans, manage your home loans, manage your investments. And in some cases, people are just auto investing. They have that particular service as well. And like I mentioned, crypto and all different types of things on a single platform. You have a lot of user growth now. So 2019 is really where things started to pick up, right? They went from 37% growth to 50% growth to fast forward 2020 was a real breakout year, doing 75% growth. And they're expecting a very high level of growth again into 2021. Their estimates are 3 million users. All right. And as I mentioned, with the cross product selling, you have it right here. So multi-product members go from 400K to 775K 2021. All right. That is almost, if my math is correct, around 25% of all users are going to be the type of user that does use multiple products. And you can see that right here, their services kind of feed upon each other, right? If you give people money, they're going to invest with it. They're going to take loans, credit cards, and times are going to be good. Actually, this is kind of like a reopening play, I got to say, that I think not a lot of people are aware of. But when the economy gets a lot better and people have more money going around, they're going to feel more comfortable spending more credit cards, investing more, right? With their platform. They're probably going to be even, taking up more loans, right? Especially right now, interest rates are still low for the time being. They talk about inflation and raising rates. That's still some times away, probably 2023, when we're going to see more rate hikes. So this is, very, very promising when it comes to the future of this company and how they're going to continue to monetize. So if we take a look at those financials to understand closer to how we value this company and what is their long-term prospect, you can see that accelerating revenue growth, as we saw earlier, specifically those numbers are going to be from, let's say, $620 million last year in 2020. It's going up all the way to $3.6 million in adjusted net revenue. That's a 5x almost in terms of revenue, which is really unheard of, right? Except for the top tier of growth stocks, like a C Limited, for example. And in terms of profitability, you see that they did a loss of $66 million last year. That is going up to $1.1 billion by 2025 in adjusted EBITDA. Okay, after net income, after expenses and taxes and all that, it's probably not going to be 1.1 billion, right? It's probably going to be maybe considerably less, but still, that is going to be a very impressive number. And to go from a loss to 1.1 billion is going to be very significant. And keep in mind, again, SoFi is coming onto the market at right now at a $10 stock price. It would have been around $8.59 billion. At the current stock price, that's going to be about $13-14 billion, give or take. So to do $1 billion in the future, that's going to be quite impressive for the bottom line. And if you take a look at those different business segments that I mentioned and hone in on those specific numbers, it's going to be even more exciting in my opinion, because if you take a look, you can see that the lending business and the technology business today is already very, very profitable. They have very high margins, very high growth rates, and you can see the revenue breakdown here. So 2020, they did $621 million in adjusted net revenue. You're going to see that the bulk of that was the lending. This is their most mature business. If you think about lending, it's pretty simple to understand. But that tech platform and that financial services platform is going to grow exponentially. So the tech platform, Galileo, is only $103 million in revenue. That is going to multiply by 9 times in 5 years. That is, oh my gosh, right? That is something crazy to wrap your head around. Even the lending business is going to grow 3 times, but kind of just brush that off when you look at the other high growth metrics of their other 2 businesses. Like, look at financial services, right? Investing, checking accounts, credit cards, all that. 2% of the revenue. It's going to jump to 32% of the revenue in 5 years. $11 million. It's going to jump to 1.2 billion. That is crazy, guys. I'm so excited by that. And when you think about that ridiculous exponential growth rate, that's not going to just stop in 2025, right? That's going to continue like crazy into 2026, 7, 8, 9, 2030, right? I wouldn't be surprised if this is, multi-billion by that time, right? Because again, you just look at the growth rate right now, 2020 to 2025, their financial services growth rate is 153%. Astronomical. 2025 to 2030, I wouldn't be surprised if that's still 50 to 100% growth year over year. So you're getting a super, super, super high growth company at this point in time. Even if they don't meet some of these projections, I think they're still going to knock it out of the park. And if they do add more banking services, apparently that's going to add even more revenue and even more income to their forecast. I wouldn't put it past them because they're trying to diversify their business so much and adding so many different exciting parts to their portfolio of businesses that they are doing a really good job, and they're going to do a really good job in the future going forward. So one very important piece of news came out recently. SoFi emailed all of its customers that it is going to expect a merger around April 9th. So very, very near-term future right here, almost a month from now. And after the merger, we're going to see the ticker symbol change to SoFi. Now, I don't know if it's going to run up again in the short term. I don't want to put short-term targets on this stock, but I think that if you're getting in now, it is at a very attractive price point. So as I mentioned, I have 1,000 shares. This was my full position that I wanted to put into this company. It's about $15,000, 10-15% of my portfolio. And going forward, I expect it to grow into a much bigger position in my portfolio, maybe in 20% or more, as it continues to appreciate over time. I do believe it's going to grow into a behemoth. And as far as valuation, I'm going to break it down. I'm going to show you exactly how much I think this stock is worth long term. In terms of valuation, we need to think about how does this compare with different financial technology companies on the market. Okay, and try to visualize what those companies were like at the time of SoFi's maturity. What I mean by that is, I don't know, it sounds confusing. What I mean by that is, if you take a look at Square, for example, okay? Square currently trades at what some might say a very expensive valuation, right? The PE ratio is 750, the forward PE ratio is 115. Compare that to the market, and that's ridiculously high, right? You look at technology companies, a lot of them trade around a PE of 30, but we have to keep in mind that Square, their sales growth is off the charts, 140% growth in the past quarter. In terms of their price to sales ratio, that's what some people use to value a company that is not doing a lot of earnings or any of earnings at all. They look at the PS ratio and see if it's high or low. So right now it's at a 10. And if you look at the history of Square, you're going to see a couple of interesting things here. So on macrotrends.net, for example, you can take a look at company metrics over time. And what you'll see is Square has always been a super high growth type of business. 30%, 50% revenue growth in many years. And the past year, they really took it off because everyone is getting on the digital platforms like Cash App and etc. So it's a very similar setup, especially when you look at the price ratios. Okay, so PE ratio has always been through the roof, or at some points they didn't have a PE ratio, as you can see here, because they were not profitable. You can see the negative EPS, especially when they first came onto the market. They were very not profitable at $11 per share. Look at the PS ratio, and you could see generally, as people recognize that growth rate and buy into the long-term story, that valuation went up quite a lot. When it came onto the market, it was trading at a price to sales around 2, 3, 4, 5, before eventually it's settled now around a 10 price to sales ratio. And that ratio is calculated by dividing the stock price and the amount of sales that they get per share. So right now, if you take a look at SoFi's valuation, is around $14.7 billion by my calculations. They're doing $621 million in revenue. That puts the current price to sales ratio about 23. However, as we've seen, that revenue is going to increase dramatically over time, and so the price to sales ratio is going to come down and thus make the stock look a lot cheaper and the valuations make more sense, especially again considering that high amount of growth rate that's much higher than a lot of other stocks and companies can expect in the next several years. So by 2025, they're expecting around $3.669 billion in revenue. That's around 6 times the number last year. So of course, that price to sales ratio is going to look a lot better. So if we take a look at the numbers here, let's take a look, assuming this company has a similar valuation to what Square is now today, that's around 10 times sales. We're going to take 3.6, multiply it by 10, revenue times price to sales, and you get the market cap of what this company should be by 2025, and that's $36 billion. Some might say that is conservative, especially when you consider the fact that 4 or 5 years from now, SoFi is going to be much more profitable than what Square is today actually. So you could argue that SoFi should be valued even higher than 10 times sales, or valued on some sort of earnings metric. You can also take a look at some promising Chinese fintech companies that have taken the market by storm of late, like a Futu, for example. That company trades at a very high price to earnings ratio and a very high price to sales ratio right now as well. And the same thing for Tiger stock, okay, Up Fintech Holding Limited, very high PE ratio, and the price of sales here is a 25. If we take into account the profitability as well as the high growth rate that's continued to be expected and the diversity of this business, I think that it could certainly warrant something like a 15, 20, or even more price to sales ratio. So if we just do some of those numbers, okay, a 15 price to sales ratio will take this to a $54 billion valuation. And that in turn is going to be 3.67 times the current stock price. And thus you have a stock price of around $62. A 20 PE ratio is going to take the valuation to $72 billion. And that in turn is going to lead to almost a 5 times in stock price, a 5x, and that is going to be $83 per share. And probably in the best case scenario, in my opinion, if we be conservative, not every stock is going to be Futu at a 60 price to sales. But if we take a 25 price to sales or a 30 price to sales, at that point, you're looking at something like a $100 billion valuation in 2025. And at a $100 billion valuation, you're looking at 6.8 times the current stock price, and that is $115. So it really depends on how bullish you are, but at the worst case scenario, in my opinion, if you're going to take a 10 times sales multiple on the company's revenue, I think you're looking at least around 3 times the current stock price. So if you want to 3 times your money, I think this is going to be a very safe bet in the long term. All right, guys, that's it for this video. So let me know in the comments down below if you are invested in SoFi, aka SoFire. That's what the stock is gonna be for our portfolios, you know what I mean? So until next time, my friends, stay well and invest responsibly.